We welcome in Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Two of the biggest names in the world of technology reporting their earnings, and they have both just come out. One of them, of course, is Microsoft. The other is Alphabet, company behind Google. I just see, Doug, that Google sales rebounded, and I also see that Microsoft beat its targets. I looked quickly at the stock before we came back from commercial. Microsoft wasn't doing a ton, so it doesn't seem like huge headlines here, but 33% rise in profit. Give us the lowdown if you have it on both of these big tech companies.
Yeah, I think Microsoft now is the #1 company. It's got a larger market cap than Apple now, so it's the top company. But they did beat on the estimates. And the theme here is the future revenue looks good. I mean, they're getting way into AI, and their cloud is expanding. So people are looking at, hey, now they started to charge $30 a month for their AI, so things are looking good for Microsoft to continue. Google, they had some miss on a little bit of some ad revenue, but I think they're thinking good things about that going forward. So everything's kind of mixed, but not a big change, I think.
The AI thing, and Microsoft especially, is fascinating because you talk about stocks that have been up a lot because of artificial intelligence. The big one, in terms of large companies, is Microsoft, to the point where it's literally the largest company out there. So we'll see. That's interesting there. I want to talk about another earnings report that came out, not right now after the bell, but earlier today from UPS, United Parcel. And the headline that came out from UPS is that they're cutting jobs. 12,000 jobs after a poor fourth quarter. But I think that's interesting because, remember, it wasn't that long ago, our big UPS story was they're paying the drivers, what was it, $170,000? Remember we had that story, and that was the big deal with UPS, and now they're cutting jobs.
Yeah, the interesting thing here is that the jobs that they were adding were more in the driver area and converting people from part-time to full-time, offering them much higher pay. These jobs that they're cutting are more in the management and the contractor area, so they're not necessarily employees, but they are cutting that, and they're trying to save $1 billion because they're trying to cut expenses and also keep their revenue going. They've missed on revenue a bit. And so higher costs come with all those hires that they planned and the higher pay. And so now they're trying to trim some other areas. Not as many people get as upset when you cut management versus if you cut a regular worker.
No, it's true. It doesn't work people up as much. You're right about that. All right, you're probably thinking it's Tuesday. We have to get to Doug's tax tips. But before that, Tax Tip Tuesday, a quick word on the economy, the broader economy, because the headline on consumer confidence today, American consumers feeling more confident than they have in 2 years. 2-year high. What do you take away from that?
Yeah, I mean, they spent more over the past 2 years with inflation, and I think they're looking forward and saying, hey, I'm seeing that things are not going up as much as they were, and I know rates are going to come down, so maybe it'll cost me less. That's the future optimism that you see, and so it's rising. The thing that's interesting to me is it's not really translating over to this administration to get credit,
right?
And I think it has to do with the fact that if you don't take the blame for inflation, you can't take the credit when it comes off. And so people are not giving that credit to this administration. Maybe they're looking beyond that, or just dismissing them, or saying, hey, it's because things are going to change down the road that I think things are going to get better. I don't know how that's going to play out, but that's why I think it's not translating necessarily to the administration.
It's interesting. Whatever the reason, you're right, it hasn't translated. And the final point, as I said, we kind of need a drum roll for this or something. Tax Tip Tuesday with Doug Flynn between now and the 15th of April. Put it up on the screen here for a minute, the tips from Doug. I'll just do the first one to get you started. Beware of unexpected communication at the start of tax season that claims to be from the IRS. Take it from there.
Yeah, millions of fraud cases are filed every year with the IRS, but specifically about 500,000 a year come in from ID theft. And so what happens is when the IRS only sends you letters via snail mail. They do not email you. They do not text. They do not contact you through Facebook Messenger. But people tend to get sucked into these things and give away their personal information, their social security number, their credit cards, and their bank info. And so the easiest thing to do is if you get something weird and it's not by mail, it's likely not from the IRS. But the single biggest thing that people can do here to protect themselves is that you can sign up with the IRS. You go to irs.gov, the website, and just put in the search IP PIN. It stands for Identity Protection PIN. You can sign up for a 6-digit code that now only enables someone with that code to file your tax return or get information. There are a lot of cases where unscrupulous tax preparers will file a tax return for somebody before they actually file and take their refund. Now you can't do that if you don't have the PIN. And if you forget the PIN, there's a way to do it. So I strongly recommend everybody at least sign up for the IP PIN and avoid some of these things that can happen if you inadvertently give away some information that you shouldn't.
All right, good stuff as always. More on that next Tuesday, Tax Tip Tuesday with Doug, and we'll talk to you about the markets before then. Thank you, Doug.